and that is in commemoration of the death of former U.S. President, that's George Herbert Walker Bush, who died at the age of 94. He does lie in state, but the United States keeping markets closed today, so no trade coming out of there, having seen the likes of the NASDAQ fall 3.8% just yesterday, over 3% across the board when you take a look at Wall Street. And that's filtered through into South Africa's market today as well. More than 1% lost today. A lot more of the banking stocks seemingly falling quite hard. The likes of Investec as well, more than 2% lost on that counter. And it has been quite an interesting day. Taking a look at the reasons for that has been primarily because of the rand falling from around 13.50 odd right down to 13 rand and 82 cents. Let's chat to David Shapiro now from Sasfin Securities. It's been an absolute humdinger of a day, if you want to call it that, David. Going from 13.50 odd against the US dollar, falling right the way through to 13.82. A lot of that is more dollar strength than it is South African weakness.
It is dollar strength. You know, what you have to realize is that when you play in the currency markets globally, it's all controlled by computers. So the algorithms say that if the dollar strengthens, the rand goes down and vice versa. Unfortunately, there's no more human interference. So there's no rationale or delays or hesitancy when it comes to markets. It's all those computers that are doing all the damage to us. So we just go along with it. In fact, it affects all markets. That's what we do today. Just try and read computers.
But one would have hoped, however, that we see a December rally, right? The Santa rally was all in full effect when we saw the stock market go up just a few days ago, and that certainly seems to have petered out. Now 1% down on the day today. It doesn't seem to be coming the way we'd like. More than 14% still down for the year.
Terrible. And yesterday, after our GDP numbers, which were on the top side of people's forecasts, there was a little bit of hope that we would rally into December. And to be honest, I was watching U.S. markets last night, and about 8 o'clock our time, which is 1 o'clock their time, everything just went pear-shaped and started to fall. And one wasn't quite sure. And I just think it's nervousness in markets. There's so many concerns, whether it's Brexit, whether it's trade issues, whether it's the Fed going to raise rates. Yesterday we learned a new term, and you're going to hear more of it as we go along, inversion. That's where short-term rates start to move higher than long-term rates, and that creates worries that this is a precedent for not deflation, for a recession.
Yeah.
So there's worries about global growth. There's worries about whether companies, and I'm talking from a global perspective now, whether companies will actually, company earnings will start to fall. So all of this is weighing down on investors. To be honest, I think there's more noise than effect, and I think that probably, from tomorrow we will start to claw our way backwards, upwards as well. So I think a lot of the issues are being dealt with. So, yeah, but it's not easy for people to go through, particularly in our market, where, as you mentioned there, we're down about 14% for the year. And it hurts all of us. Yeah. It hurts our pensions. It hurts our savings.
Yeah. David, one would have noted then, as you said, that inversion, that bond yield inversion out in the United States, sparking fears of whether that economy is actually in a recession. Donald Trump would hate to see that, because he just thought that he had done well with that economy.
Well, exactly right. That's exactly right. Look, he's pretty nervous about it because it will reflect on him. And a few months ago, we were worried about long rates going too high and the Fed being a little too aggressive in raising rates. Now it's gone the other way. There's a feeling that they're going to hold back. So we've seen, without getting too technical, we've seen the long rate. That's the 10-year rate in the U.S., which was at one stage 3.25, 3.25%, has come all the way back to 2.90, and now that's causing concern. Why are people worried? Why has this rate come down? Does this mean that things are slowing down, that there's no demand for money? So it's the arguments go backwards and forwards. Yeah. But as you correctly say, it's not in the interest. It's not in Trump's interest to have this inversion.
So OPEC are set to meet then, David Shapiro. The question becomes Qatar leaving OPEC, Saudi Arabia and Russia both agreeing on a pact of their own. The United States headed off in their own way. One would say then that Saudi Arabia would not look after the interests of OPEC if they're going to go their own way with Russia. Is this the beginning of the end of OPEC?
I would imagine so, because they're no longer the big producer. You know, today America and Russia, both of those are the largest producers, and they don't have, they're not, what's the word, subservient to a government. Well, maybe the Russians, but certainly not the Americans. And they want to go their own course. And it depends whether Russia agrees with Saudi, whether or not they will actually cut back production and try to get the oil price up. But at what price does it suit Russia? We're not sure. Do they want it $70, $75 a barrel, or do they want it maybe 65? So, but I think you're dead right. I think this is going to be the end, or start to spell the end of OPEC, simply because they no longer have that huge power that they used to have of control over markets as well. So for us, it's actually very good. I mean, if the oil price keeps coming down, from an inflation point of view, I think it's very good, as long as it doesn't translate into lower commodity prices. But I think there's a disconnect between the two of them.
So you reckon it could be necessarily a good decision or a good way for the markets to trend for us as well here in South Africa, particularly as a oil importing nation, and predominantly because prices could go lower. But as you said, until we know where Russia actually wants prices to be, we can't really tell. No,
we can't. So no one's making any judgment. You know, oil remains, if you look at Brent, which is our benchmark, at about 62. It's slightly up from where it was a couple of weeks ago or a week ago, but it's still down from that 80 that we saw, I think, in September, thereabouts, you know, when we really worried about oil prices. And also we've had the weaker dollar, you know, with lower interest rates in the U.S., we've had a stronger rand. So it's working in our favor. And to be honest, I don't think anybody realizes the rand is more or less where we were at the beginning of the year. Sometime during there, we actually fell to 11 or thereabouts. But at the beginning of last year, in January, we were more or less these levels. So we've actually evened out. So not many people know that.
Yeah. David Shapiro will continue to unpack the market, seeing exactly how things are faring. The days are still young. Yes, we're hoping for that December rally on South Africa's front, but more than 1% lost today. It doesn't seem to be headed in that direction. Just how close do we get to 50,000 points is going to be the question as we head towards the end of this year. That was David Shapiro from Sasfin Securities.